altcoins disproportionately losing, but they're holding their value versus Bitcoin at the moment and just kind of dropping proportionately against dollars. But honestly, even with all of this, kind of pointed out yesterday, if you look at Bollinger Bands as a sign of volatility, right now the Bollinger Bands are literally on the weekly the tightest they've ever been. Volatility is exceptionally low. There's just not much happening here, so it's hard not to just overanalyze the basically nothing that's going on. I mean, that's really what's going on in the market.
Question: If you look at, go ahead, Ron.
I mean, we did a show with options traders last night, and options, for those of you who don't know how options are priced, they're priced using volatility. And the guys are saying that this is the lowest volatility since 2019. If you look at crypto and Bitcoin as a whole, we haven't had this kind of low volatility since 2019. So there's really, really, really no volatility.
But if you look at Rand, if you look at the 4-year cycle, though, interestingly, this is exactly where we would be kind of relative to that, and you would expect this to be a period of low volatility, kind of coming into the halving next year, right?
Yeah, I mean, I agree with you. I do think, though, that we are going to get volatility tomorrow, because I think we've got the FOMC tomorrow. The market has priced in one more interest rate hike, which is due to happen tomorrow. And I think that what's going to happen is we're going to get I spoke about on the show today, we're going to get an increase in interest rates tomorrow. But I think that Powell's going to allude that there are more rate increases likely. I think that's what's going to come out of it.
Why do you expect volatility from that? Because that's pretty expected, no?
No, it's not. If you look at what the market's expecting, it's expecting one more rate hike tomorrow and then no further rate hikes. And if you look at what Powell if you look at what I think Powell's going to do, is I think he's going to say we're raising, and a lot of the members say that they see more rate hikes in the future. And then we're going to have the dot plot, and the dot plot, I'm sure, is going to show higher rates at the end of the year than we have tomorrow. And I think that's going to throw the market off. Why do I say that? So I had Gareth on my show today, and he highlighted something very interesting. He said, if you look at the price of oil, if you look at the price of gas, both the price of oil and the price of gas have gone up in last month 15%. And the energy sector was the sector that brought down inflation in the last cycle. So what it's saying is that because the gas price and the oil price and the energy prices are increasing, we can probably expect inflation to start increasing again. And so the market probably celebrated the 3% inflation too quickly. And I don't think that Powell's going to take the risk of getting egg on his face again. And that's why I think the market's going to be shocked tomorrow. So I think that tomorrow we have a down day in the stock market. And I think that results in a down day for Bitcoin as well.
But I want to look at it more holistically. And David, and for the rest of the panel, but William, David as well, feel free to jump in on this one. If you look at it historically, has crypto always lagged behind equities the way it is now?
No, absolutely not. I mean, right now it's completely untethered. I mean, as I said.
And is there examples we could look back over the last few years that would be comparable to what we're seeing now?
It's actually been far more rare over the history of Bitcoin for it to show that close correlation that it did for parts of the last few years. Historic correlation, I mean, I looked at it months ago, but on a 10-year basis, correlation of Bitcoin to equities was like 0.16, effectively uncorrelated. I mean, everyone knows that in periods of stress and black swans, when there's a massive sort of bearish move at